Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 22nd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Overall, we continue to see an uptrending behavior out of this market. It continues to show uptrending structure here. One thing that we are building is kind of this energy down here that could easily lead us to the next phase up. This is the phase here where we start to see bears come into play. Bears got fed one day here. Now they're defending here for a shot at perhaps a downward expansion, maybe back toward 2770. Or if we break down even further, maybe reaching the 100% ADR target of this impulse move, which would be 2616 quarter. So right now, there's energy being built up in this market. We haven't really figured out direction just yet. Overall, as the bears continue to try to defend the zone, you can see the previous session had a bearish outside day for the ES, very bearish. The midpoint entry would be right there, and that's basically a 3100 and change. Let's look at that exact midpoint. The exact midpoint here, 3100.75. So again, right now, any pullback shy of closing through that level could still be a selling opportunity for bears here for a shot at pushing this thing down. Bears are trying to keep this area offered up here, but again, if price starts to close back through 3100 today or 3110 for example, that could be an indication that we are about to break higher within that channel I just described. Okay, let's take a look here at the NQ. With the NQ, this one right now is also holding at highs. We are seeing a midpoint entry again with this bearish rejection here. This bearish rejection took out 3-day highs and failed. It came back above the FOMC level and failed. And now we're seeing a retest back at the midpoint of that rejection day. And typically speaking, if price stays below that midpoint there, which I believe is 10,014 quarter. That's what it is right there, 10,014 quarter. That level right there is going to dictate whether we see a little bit more weakness here over the next few days, perhaps the next week, or if we close through it, any bears that got in here will start to see their positions get squeezed, and we could see new highs again as this market has continued to show quite a bit of resilience. The other key level, lastly speaking here for the NQ, is this level right there, and again that was the high of the year, and that's basically a 8760 level. Let's look at the exact level right there. So the exact high here, if we bring this back, is 9763. Keep an eye on that level. I'm going to draw it out right here. Keep an eye on this level because again, this market, if it fails to hold that level overall, that could be a rejection that could eventually lead this thing back down. So if this is a lower high and then we're about to see a push back to the zone, it could be an overall rejection of that level. We could perhaps drop back down toward, say, 82 to 85 in that case. So again, very important zone that we're here right now on the short-term basis and a long-term basis. Keep an eye on 10,014 quarter today for signs of early directional bias this week. All right, taking a look now at crude oil. With crude oil right now, we're seeing very similar price action like the NQ, for example, retesting that previous high here. We saw a bit of rejection in the previous session. However, while we did see a tail at the upper end of the day's range, you can see that the day's close was right at the midpoint or so, and that's fairly bullish. So if the previous session has a closeout like that, then we may see a push through that mid. And again, it depends on how we close against that mid today. If bulls can continue to find acceptance above it, we likely continue higher. If bears continue to defend levels at 3750, then perhaps we see a bit more of a pullback. Again, this market has been very, very bullish, so the expectation is for more strength overall. Every pullback to the PIMA trigger zone has been a buying opportunity. Right now we're kind of flowing out of it. Overall, more upside is likely expected, especially if we drop down to say as deep as 3750. That could be a rejection zone that pushes this thing right back up. So right now, fairly quiet with a narrow range of 49% of ADR. It's inside day so far, And right now, the PivotBoss bands are pinching in the 512 tick chart, which suggests that we are coiling up, building energy for a potential move ahead. A downside break through 39.30 suggests weakness ahead, and an upside break through 40.20 would open up the upside. Okay, let's take a look lastly at gold futures. Gold futures right now reached the upper end of the range. This is the zone where you typically want to sell gold recently over the last 3 months. At some point, this is going to fail because we don't stay in a trading range forever. But when we've been in this area, it's been an opportunity to sell it back to the bottom. You get into the zone, sell it back to the bottom here. You see it there, back to the bottom. And now here we are again. If you look up maybe a week to 10 days from now, we may be testing the 1670 level. Again, that depends on how we close here today, because if we start to close through 1775 for the first time and close up here, we still have plenty of day left, then that would be suggestive of upside expansion toward the 1831 and 1957 targets above. So again, it's going to be very important here, but right now, keep an eye on 1775. That's the key level here for today and the week. Do we close beyond it for the first time, or are we going to see rejection again? Based on history, based on the range, based on the D-shaped profile, we likely rotate back toward the opposite end of the range. Okay, that is it for now. We'll see how this plays out heading into the rest of the week of trading. Good luck, trade well, happy Monday, and I will see you in the trading room. Take care.